Hi, I'm Jane Mitchell, Financial Advisor here at AdviseWise. I'm joined by Dr. Steve Garth, Chair of our Investment Committee. We're going through the quarterly report for the June quarter. Steve, tell us about the Australian market and what it's done in the last quarter and for the first half of this year.
Yeah, absolutely, Jane. Look, when you look at the first half of the year, it's pretty good at 4.5%. But over the full 12 months, it's up 14.8%.
Yeah.
And you can see on the chart there, it just seems to be going up and up and up. Even better, the other line we've got there is volatility. And volatility is going down and down and down. So it's like the perfect combination. Low volatility and markets going up.
Sounds good. What about the international markets?
Well, Jane, if you thought Australia was good, have a look at this. In the international markets, the developed markets, they're up by 17.5%. Now, most of the international markets, about 65%, is in the US, and that's up an extraordinary 19%. But you'll see that Europe is doing really well. Who would have thought? There's a war going on there.
Yeah.
And Japan, which kind of never does anything, that's also up really strongly. So it's a very broad-based rally, but it is centred around the US. And just quickly on emerging markets, Jane, you can see they're not doing as well. And that's mainly because the biggest part of emerging markets is China. And China's economy really hasn't kicked on out of the COVID lockdowns the way many commentators thought it would. So that's a drag on the emerging markets.
So if we think about the US markets, how are they specifically performing?
Yeah, let's dig into that because it's a very strong return from the US. Jane, I think everyone's heard of the S&P 500, that's the big US index.
Yep.
It's actually made up of companies that sit on two different exchanges. One is the NASDAQ, which I'm sure people have heard of,
Yep.
and the other is the New York Stock Exchange. That's kind of where older companies tend to sit. And you can see in the chart here that the New York Stock Exchange, it's kind of doing much the same as Australia over the first half of the year. But look at the NASDAQ, up 37% year to date. And what's even more extraordinary, Jane, that's really being driven by about 7 companies. They're called the Magnificent Seven. It's Apple, Microsoft, and a company most Australians probably haven't heard of called NVIDIA, which is now the 3rd largest company in the US. And NVIDIA makes semiconductor chips, and with the current craze going on for anything related to artificial intelligence, NVIDIA's up 180% year to date.
Yeah. So for our clients, they get exposure to these stocks through their international allocation in their portfolios. So
that's right.
Yeah.
So all of AdviseWise clients do have exposure to these NASDAQ stocks.
Yep, it's pretty good. So bonds and interest rates.
Yeah, well, that's it.
Those.
Bonds and interest rates are
Yeah.
intricately linked, and of course, as everyone knows, interest rates keep going up. And in fact, even though there's the pause here and there,
Yeah.
there's still a few more rate rises to go. And the market's trying to predict where this will end, and they haven't quite worked it out yet. So by the market, we mean bond yields, not everyone's cup of tea, I know, but bond yields keep climbing up a little bit as they keep trying to find out where is the terminal rate. Now,
Yeah.
the good news is it's not far away. You can see the yields are kind of flatlining, but because the yields have climbed in the last quarter, you'll see the bond returns are flat, a little bit negative for the quarter. So bond prices are inversely related to yields.
Steve, thanks again for that insight. Really valuable and good reflection on what markets have been doing. Remember, at AdviseWise, we believe in a diversified portfolio. We're here for the long term, so we don't panic over all this volatility that we see. We are aware of what the markets are doing, but we're just there for the long term. If you have any concerns, always get in touch with your advisor. Otherwise, we'd like to thank Dr. Steve for his insight, and we will see you again next quarter's update.